What do you mean stocks are going down? I thought stocks only go up. Are you kidding me? No, stocks only go up. They don't go down. What are you talking about? Stocks only go up. Oh hey, my name is Mike. In today's video, we'll be discussing my portfolio update and what I am doing when my stock portfolio is tanking. In this channel, my main goal is to help you build wealth the right way. In my channel, you're going to see a raw, unadulterated view of what my personal finances as well as what my investment portfolio is. If that interests you at all, please like and subscribe. To the portfolio update, my total assets I have is $197,828. If you look in the bottom left hand corner, I have all my monthly net worths. I started tracking this pretty heavily in September. So if you see in September 2020, I really only had $127,000 total assets in there. And if you look down, my highest month where I had the most assets was actually in February of 2021, where I had $263,000. When my portfolio was at that point, I felt like I was on top of the world. I'm like, oh, it's going to keep growing. It's going to be great. And then if you look at the next couple of months, it's just been downtrending, which is okay. You know, stocks don't always go up. Investing is a long-term game. You don't want to be spending your valuable thought process thinking that you're going to get rich within weeks and weeks and you're going to be replicating 10, 20, 30% returns every single week. It's just very unrealistic to think that that is going to be happening. So the fact that my portfolio has been dropping, I really haven't been thinking too much about it, just because I think that, you know, investing is a long game, and when you do implement the right strategy to investing, it helps you sleep a lot easier at night. The most important thing to know when the market is in this type of condition with speculation and inflation is to be invested.
The stock market's a very good place to be, but I can toss a coin now. Is it going to be lower 2 years from now? Higher? I don't know. More people lost money waiting for corrections and anticipating corrections than the actual corrections. Well, you ought to look in the mirror every day and say, what am I going to do if the market goes down 10%? What do you do if it goes down 20? Am I going to sell? Am I going to get out? If that's your answer, you should be reducing it today. Well, hey, this perfect record. I think the 13 years I ran Magellan, the market went down 9 times, 10% or more. I had a perfect record. I went down more than the market. Every time I went down more. So I just didn't worry about it. The point is, would you say to yourself, do I need this money in a year? Do I need this money in 2 years? Do I need this money in 3 years? So longer term, stock market's been the best place to be last 10 years, last 30 years, last 130 years. But if you need the money in 1 or 2 years, you shouldn't be buying stocks. You should be in a money market fund. Well, I think anybody that's investing in the stock market has to understand, you buy a company. These are not lottery tickets. These behind every stock, there's a company. If the company does well, over time, the stocks do well, and vice versa. You have to look at the company. That's what you're researching. That's what we do at Valley. That's what I do.
The most important thing when it comes to investing in an inflationary market is to actually stay invested in equities and stocks. The second most important thing is the speculation thing. When dealing with highly speculative stocks, you have to be investing in the highest quality stocks, your high conviction stocks. So when the market's happening like this, where there's huge tech sell-off, the market is trending down, when there's these things happening, you have to have higher conviction plays, and you have to be invested in companies you know will make a lot of money in the future. Those are the main things to do. So being invested as well as investing in high quality stocks. So if you look over here, let's talk about my 401k. In my 401k, I have about $55,877. I am shooting this video when the stock market is open, so when I do flip through each of the different tabs, it might be different. So if I go to my 401k, it's at $55,877.04. The most important thing when it comes to a 401k is that you're investing in the total U.S. market, the total international market, U.S. bonds and international bonds. So pretty much every single time I get a paycheck, some money goes into my 401k. Let's talk about my Roth IRA. So in my Roth IRA, I have purely dividend stocks. I don't own any dividend ETFs. I do own 2 ETFs in here, but I have my reasons to invest in those, which I won't be discussing. But in my dividend stocks portfolio in my Roth IRA. When I was talking about the high conviction stocks, I actually went through my dividend portfolio and got rid of a lot of stocks. I only kept the stocks that I know have a really good future going forward in producing cash. And you always want to be investing in an asset that ultimately returns money to shareholders, returns capital to shareholders.
Over the last 40 years, 71% of the market's returns came from dividends, not capital appreciation. So rule one for me is I'll never own a stock that doesn't pay a dividend, ever.
In like the 1970s, dividends accounted for a large percentage of gain in the stock market because, you know, the companies weren't increasing, their stock prices weren't increasing, but they still were making a bunch of money and they were paying it out to shareholders. So it'd be wise to be investing in companies that pay dividends. So in my Roth IRA, I strictly have dividend stocks because I think that having dividend stocks in your Roth IRA is the most important place to put dividend stocks. Some people say, no, you should only be putting growth in there. I disagree with you. I cut the holdings to the ones that I think are the most important going forward. And then the other thing is I'm staying invested. So as long as I'm doing that, I'm winning. So there's my Roth IRA. So about $22,241.58. Let's go over to my Fidelity account. So in my Fidelity account, I have my Tesla. I believe that Tesla is going to be the leader. Tesla to me is a high conviction play. I want to max out my Roth IRA first, which I just did with my last paycheck. Now moving forward, I'm going to be putting money in my Fidelity account, which is my growth holdings with Tesla, and in my Robinhood, which is also Palantir. What I would like to do is I would like to consolidate and put them all into one account. So let's switch over to the Robinhood portfolio. Oh, and speaking of that, I'm being margin called here, so we'll talk about that in a second. When I started this Robinhood account, I actually started with $16,000 in this account. You know, it was doing very well. I ran into some issues. I was getting a little bit greedy, and you know, take this as a learning. Experience my pain, so you don't have to experience this pain. Is don't be using margin. Margin. You can lose more and you can gain more, but the thing is, like, when you're losing, it sucks. So if you look here, I was getting actually margin called 2 days ago, but then Palantir price went up, but then now the Palantir price has gone down, and right now I'm below this margin maintenance line, which means that I have to cough up $686.49 to pay for this account deficit. I don't know what's going to happen. I don't know if it's at 3 o'clock on Friday that it's going to sell some of my shares, or it's going to allow me to wait out the next couple days and hopefully the share price increases. I don't know if the margin call happens immediately, or they just start selling assets, or I don't know what happens when you have open option positions and they're selling your stuff. So I don't know what happens, but ideally going forward though, I still want to be investing in Palantir. So what my plan moving forward in this portfolio is to actually get out of these puts that I use to acquire all of these shares. You know, I thought that Palantir was going to be trending nicely. I mean, their financials were looking better. They actually killed their last Q1 financials, but yet the stock is tanking, which makes no sense to me. But whatever, you know, the stock market isn't always efficient in a short term. It will be in the long term. So moving forward, I'm going to be putting money back into my Tesla, and then I'll be putting money back into my Robinhood. So, you know, if I get an extra 500 or $1,000, 500 to the Tesla, 500 to Palantir, and moving forward, that's where all my investments going to be going to. I maxed out my Roth IRA, my 401k is still being funded because I'm still working. So these are the things going forward. So just to recap, you know, Peter Lynch said his opinion on money, as well as Kevin O'Leary. And, you know, again, if you're just in this type of environment, staying invested is the most important thing, but then also investing in high quality. I think Tesla's quality, I think Palantir's quality, and I believe I have 28 or 29 dividend holdings that you guys can check out in the description. Quality is important, and staying invested, and cost averaging. Those are your most important things. I hope you guys have a great day. Take care, and don't forget to like and subscribe.